Have you ever wondered how you could find the next big company, before it becomes a household name? Well, that's really the big promise of small cap investing. Today, we're taking a look at a new fund that's trying to do just that, the Groww Small Cap Fund. It's a new fund offer, or NFO, and it's all about tapping into the growth potential of India's smaller companies. So let's dig in and see what it's all about. So this is the big idea the fund is built on, right? The belief that somewhere in that huge universe of small cap stocks are the future giants of the industry. It's a really exciting idea, and it pretty much captures the exact reason why investors get so drawn to this part of the market.
But that's the million-dollar question, isn't it? It's not just about throwing a dart and picking any small company. You need a real system to find the ones that have that special something. This fund says it has a specific framework for doing just that. But first, let's look at why they think now is the perfect time for small caps.
All right, so what's the big picture here? The argument is that India's smaller companies are really starting to hit their stride. They're benefiting from all the economic growth and recent policy changes. And you know what? The data seems to back this story up pretty well. Okay, so just how healthy is this market? Well, get this. A massive 73% of companies in the Nifty Small Cap 250 index reported positive revenue growth. That's not just a few star players carrying the team. It's a sign that things are looking good pretty much across the board. And hey, it's not just about making more sales. 63% of those companies also showed positive profit growth. Now, this tells us they're not just growing, they're getting smarter about turning that revenue into actual profit. That's a huge sign of a strong, well-run business. And if we zoom in on the earnings momentum, the numbers are pretty staggering. The combined net profits for these small cap companies jumped 18.3% compared to last year. That is some serious earnings power happening right now in this space. So you're probably thinking, with all this amazing growth, these stocks must be sky high, super expensive, right? Well, here's the interesting part. Not necessarily. Valuations have actually cooled off a bit. The price-to-earnings ratio is trading much closer to its 5-year average, which suggests that the entry point might be a bit more reasonable than it was, say, a year ago. Okay, so we've set the stage, we see the opportunity in the market. Now, let's get into the specifics of this fund and how it's designed to grab that opportunity. So what exactly is the Groww Small Cap Fund?
So this is straight from the official playbook. The fund's mission is pretty clear. It's open-ended, which just means you can invest or take your money out whenever you want after this initial offer period is over. And the goal? Simple. Aim for long-term growth by investing in small-cap stocks.
A fund is only as good as the person calling the shots. At the helm here is Anupam Tiwari. He's a chartered accountant with more than 2 decades of experience in the industry. And he's had senior roles at some big names you've probably heard of, like Axis Mutual Fund and Reliance Nippon Life. All right, now for the really crucial part, their strategy. How are they actually going to do this? The fund isn't this randomly picking stocks. They use a specific disciplined framework that they call QGaRP. So let's break down what that funny-sounding acronym actually means. So QGaRP, it stands for Quality, Growth at a Reasonable Price. It's a philosophy that tries to perfectly balance the exciting hunt for fast-growing companies with the sensible discipline of not overpaying for them. Think of it like a 3-step filter they run every single potential investment through. First step is Q for quality. This is the foundation of the whole strategy. They're looking for companies with honest management, solid governance, and a strong competitive advantage. That's the moat you hear about. It's like a castle's moat, something that keeps the competition at bay. Then you've got G for growth. I mean, this is the whole point, right? This is the engine. The focus here is on finding businesses that can get a lot bigger, ideally by riding the wave of some major long-term industry trend. And last, but definitely not least, ROP, at a reasonable price. This is where the discipline comes in. It's super easy to get swept up in a great growth story, but this step is all about making sure they only pull the trigger when the price makes sense. It helps them avoid paying for just hype. Okay, let's shift gears and get into the nitty-gritty. Who is this really for, and how does someone actually invest? This section covers all the practical stuff you need to know, and that, of course, includes the very important topic of risk.
All right, here are the key details you'll want to jot down. First off, and I really want to stress this, the official risk level is rated as very high. The NFO period is from January 8th to the 22nd. You can get started with as little as 500 rupees, whether you want to do a lump sum or an SIP. Just keep in mind there's a 1% exit load if you sell within the first year. And finally, its performance will be measured against the Nifty Small Cap 250 index.
Just a quick word on how these things are priced. A fund's price per unit is called its net asset value, or NAV. It's basically a simple calculation they do every single day. Take the total value of all the investments, subtract any liabilities, and then divide that by the number of units out there. It's how the fund's performance gets tracked day to day. I want to hit pause right here because this is super important. The official riskometer rating for this fund is very high risk. We can't just gloss over that. Small cap stocks are, by their very nature, way more volatile than bigger, more established companies, and it's absolutely crucial to understand that before you even think about investing. So what does very high risk actually mean in practice? Well, you're talking about things like market volatility. That means prices can swing around a lot. There's also liquidity risk, which means some of these smaller stocks can be tricky to sell quickly without messing up the price. And of course, like any fund, it's exposed to those bigger economic risks tied to interest rates and credit. And that brings us full circle. The whole appeal of small caps is that amazing potential, that chance to invest in tomorrow's giants today. But as we've clearly seen, that potential comes hand in hand with very high risk. So the real question isn't just about whether this is a good fund, it's about you. Does this high risk, high reward balance fit with your personal financial goals and how long you plan to stay invested? That's the most important thing to think about.